Okay, well, 88 points. Things are looking super strong, and it's green out there. Market breadth is also positive, 2:1 in terms of advances to declines. As promised, we've got the management of Dixon Technologies now joining us. The stock has done very well. I mean, the bounce in these companies, Dixon and some of the others like Camber, Keynes, etc., Sirma, etc., has been very, very strong. It's up another 1%. This morning. We've got Mr. Atul Lall, Managing Director of the company, joining us. Mr. Lall, great to have you with us here. So, revenues have been in line with what the market was expecting, but maybe on the margins, perhaps there is a little bit more to be desired. So let me dig right into specifics. So on the consumer electronics side, margins have come off a little bit, 3.4% compared to 3.7% quarter on quarter. And on the lighting product side as well, there is about 100 basis point contraction in margins. What happened and what's the outlook in these two areas?
So, Prashant, in our industry, there is an element of seasonality. So, I think I'll request that it be more prudent to compare year on year. If you compare year on year basis, because Q1 for us is relatively subdued, there is a margin expansion, both in lighting as well as consumer electronics in our television business. On quarter, there has been a bit of compression, primarily because the demand in Q1 is normally subdued and the fixed costs remain the same. We feel going forward, when you compare year on year in the following quarters, the margins would be in a similar range of what they were earlier.
Okay, so got that. So you're saying, so on a steady state, what margin should we look at in these two businesses, sir? Going ahead.
So we feel that in the case of lighting, the margins would be in the range of around 9%. And in televisions, it will be around 3.5 to 3.7.
Mr. Lall, let's talk about the mobile segment, mobile and EMS, because that's, whether I look at it year on year or quarter on quarter, I mean, that's one part of the business that's really firing away, and it's a large part of the business. Do you expect the next 3 quarters to also exhibit the same kind of growth? And what's the scope over there, given that, we have the Jio Bharat phone and quite a lot seems to be going on?
So undoubtedly, in our product portfolio, mobile and EMS is going to be the largest trigger of growth. It's the largest opportunity, and that's what we are capitalizing on. In mobile, we've had significant new customer acquisitions, which will get into the execution mode sometime in September on Q3 of this fiscal. So undoubtedly, that will be the largest trigger of our growth. And also in the EMS side, our business on accessories, that is hearables and wearables, is doing exceedingly well. That particular segment is on a big high and the order book is very healthy. So this will be the largest contributors to our growth plans in this fiscal and also the following years.
Okay. All right. Hi. Good morning, Mr. Lall. What about for the year itself? What is the revenue number we should be targeting? You've had a good start to the year. Quarter 1 has shown good growth. Last year, you did roughly around 12,200 crores of revenues. So what is the number likely to be this year? And mobile and EMS, since that's the largest contributor, you're doing a run rate of close to 1,800 crores per quarter. How much is that likely to scale up to by the end of this year? Let's get those numbers out of the way first.
So we're not giving any guidance this year, but we would like to assure all the stakeholders that the growth is going to be much ahead of the industry growth, in line with the expectations and the expectations that we have built earlier. It's going to be much ahead.
So what is the industry growth you're factoring in there?
Look very good, and the largest contributor of this growth is going to be a mobile business and also the EMS business.
You want to give us what is the industry growth you're factoring in?
So industry growth is normally 12 to 15%. We're going to be ahead of
that. Okay, all right. Just a quick question on the TV business. Will you be able to cross the FY23 volumes? In quarter 1, it's down by close to around 5%. Also, for this business itself, where does your ODM share settle at? It's gone up from mid-single digits to around 29%.
So last year, we had done a volume of almost 3.4 million. In the first quarter, there has been a degrowth of 5%. We feel we're targeting, in our internal budget, we're targeting a growth of around 8 to 10%. But let's see that how the festive period performs. I feel there's going to be in the range of 3.4 to 3.7 billion in the current fiscal as far as television volume is concerned.
Okay, Mr. Lall, just a word on margins. If I go back to the mobile segment, I mean, volumes are growing there tremendously. You've outlined that. On a quarter-on-quarter basis, margins again came back to the 3% mark. They were above 4% in Q4. As we go forward, and then, on the con call, you also indicated that overall there is a thrust to push up the design side of the business, which obviously is margin accretive. So how will margins play out for the year in mobile specifically, and overall blended EBITDA margins for the company? What is the expectation that we can work with?
So please appreciate that our design initiatives are largely confined to televisions, to lighting, to washing machines, and our new category of refrigerators. In that, please be rest assured the margins profile is going to be significantly higher. In the EMS side, the margins are in the range of around 2.7 to 3.5%. So they're going to operate in this particular range in mobile business and also our other EMS businesses.
Design significantly higher. Can you just tell us significantly higher in design would mean how much? And then where does it take the blended margin to?
So we target that in the ODM business, that's our own design product portfolio, the margins are almost close to double digits. And on a blended basis, the margins would be somewhere in the range of 4 to 4.5%. We try to push it towards 5%, but it's going to be somewhere in the immediate case because the larger trigger is on the EMS business is somewhere between 4 to 4.5%.
Okay, all right, we'll leave it there, Mr. Lall. We have more questions, but out of time, unfortunately, so we'll love to have you back for more details. Thank you indeed for joining us with that. Well.